Eric Schatzker, who knows these banks inside and out. You've interviewed Brian Moynihan more times than I can count. What's his priority right now, given what we've just learned in this earnings report?
Getting the bank back on track, putting history behind it, getting Countrywide in the rearview mirror. Same goes for much of what they inherited with Merrill Lynch. The thing that strikes me most out of this earnings report is this. If regulators globally, secretly, behind closed doors, want banks to get smaller, it's working at Bank of America. This is a smaller bank than it was last quarter. Book value is actually down. Loans are down. Deposits are down. That's not necessarily a good thing, but that contrasts with what we see happening at JPMorgan. Brian Moynihan is trying to turn Bank of America into a slightly smaller, more manageable institution. There are fewer branches than there were a year ago by some 300. There are some 229,000 employees now, down almost 4,000 from last quarter. It's working, right? Expenses down 2.2% doesn't sound like a lot, but that's very meaningful when it comes to the bottom line. It's one of the reasons that Bank of America reported better than expected.
Is that a good thing, though? Do investors want Moynihan to streamline the bank and make it smaller?
Well, certainly from an expense standpoint, because there's no revenue growth.
But operationally, in terms of the different business lines and how they integrate with one another, synergy, all of that.
Bigger isn't always better, and bankers are beginning to learn that. It's an enormous institution, very difficult to choose your spots, but Bank of America does have a few spots that it's chosen that make it distinct from JPMorgan. For example, wealth management. They have the largest brokerage business in America, and this thing is on fire. We may find that retail investors have been put off by the recent market volatility, but at least through the end of the third quarter, they had a 27% pre-tax margin being sort of the standard by which you judge a wealth management business, better than anybody else out there. The Europeans, the UBSs and the Credit Suisses run different kinds of operations, largely a private bank, and they typically have better pre-tax margins, but this is almost certainly going to be better than what we see from Morgan Stanley in a couple of days. You can check the box on a number of different things. The company is making progress. The return on equity is still disastrous, in part because of the $5.3 billion pre-tax reserve for the DOJ litigation. But underneath it all, and that's why you have a 42% number on the adjusted EPS line, things are getting better, Tom.
What does adjusted mean?
Adjusted means, first of all, that you take out that $5.3 billion settlement figure.
You're not buying it.
I don't buy it.
You've been stewing during this whole thing.
CFA hogwash. I don't know what else to say.
Also, those DVA gains as well.
I wish everybody watching and listening could see the set of Bloomberg headlines come across. It's one big adjustment, Eric. It's just one. They did a net loss of
I don't agree with that. I don't agree with that. Look, Bank of America is a complicated bank. It's a kitchen sink quarter every time.
Yes. Yeah.
But over quarter after quarter after quarter, you have to look at what Moynihan and the other executives of the bank are doing with the problem assets,
the
legacy assets and servicing.
They're working it through, absolutely.
It is down. So the number of loans that are delinquent by 60 days or more, this is in this LAS bucket that they've created, effectively a bad bank, down 44%. Year over year. That's a meaningful improvement. That doesn't mean that Bank of America is an amazing investment yet. There's a lot that they have to do before they can earn their cost of capital. But and let's not forget, they're trading at a significant discount to book value, and that's going to continue today. There's nothing here that's going to suggest to the investor that all of a sudden this thing is going to start minting money. Fed has to raise rates for that to happen. But, Tom, I would say that, yes, there are a lot of adjustments, but underneath it all, there's an institution that's getting smaller, more efficient, and arguably better.
I like what you said about every quarter is a kitchen sink quarter. So now that we've gotten the big commercial banks, the money center banks out of the way, now we have Goldman Sachs and Morgan Stanley to look ahead to. What's going to be the major takeaway there?
Well, people want to see how much better Goldman Sachs is in fixed income trading than everybody else. Goldman Sachs is supposed to be better. Bank of America's fixed income trading came in 11% higher than it did the year ago, but slightly down from the second quarter. If Goldman truly is the gold standard in fixed income, we should see that this quarter. And in Morgan Stanley's case, how competitive is the wealth management business with the bar set by Merrill Lynch this quarter?